Welcome to Markets Now. I'm Michelle Rook with Tom Fitzmayer, Summit Commodity Brokerage, and livestock to the plus side this morning with the grains setting back. And Tom, let's talk about pressure. We're back talking tariffs again this morning, aren't we?
Well, yeah, we had that imposed those tariffs on Europe for aluminum and steel, and then now they're talking about retaliation against us and our grains, and we do export a fair amount of grain to Europe. So I don't know. The most of what they have purchased in soybeans has already been shipped. Expect maybe little to unknown. So I guess we'll have to see. We kind of bounce around between that and the tariff threats with Canada, and we talked a lot about China, but they aren't buying that much from us, buying no corn, and probably aren't going to buy many beans with the record Brazilian crop. So it's like you and I talked before we started the show here. There's a lot of moving parts.
Yeah, there are. And one thing we should talk about Canada is they are a large export market for us from the ethanol perspective. And they've already said, hey, we're not going to rule out tariffs on ethanol on retaliation, right?
Well, it's interesting because ethanol stocks, while they're at record levels, that's been tempered somewhat by really good ethanol exports, and a lot of that's going to Canada. So if that gets slowed up or stopped, then all of a sudden you're going to start to see ethanol stocks blossom here, and that's kind of a problem because in Illinois, I think ethanol production is about break even. From what I've read, Iowa's about a 10-cent loss on ethanol production. So if you start creeping into that, that's not going to be great for the corn market for sure.
And soybean oil has gotten caught in the tariff war between China and Canada as well because of canola, right?
Right. Well, the Chinese said they're not going to take Canadian canola. So all of a sudden that gets backed up. Are they going to try and discount that and move it into the U.S. before this April 2nd tariff gets imposed on Canada? And this big demand for bean oil on an export. Why? I mean, exports for bean oil have been amazing, but that has come at the expense of domestic demand for bean oil because it's hurt the biofuels demand. So you got Canada, China, the U.S., domestic fuel, biofuel, all that in the mix in these markets, and it really. The bean oil market should be fairly well supported, but it hasn't been because of all this uncertainty.
The other thing that's adding to that uncertainty, though, in the bean oil market, Tom, is the fact that we do not have 45Z guidance. We've lost the dollar per gallon blender's credit for biodiesel. And in the state of Iowa, we have, well, in other states too, we have some of these plants, biodiesel, that are shuttered, right?
Right. I mean, a year ago, there was tons of optimism about where all that could lead in terms of demand, and it all is just, I don't want to use the word collapse, but it kind of has, because all this uncertainty has prompted none of that not much of it to develop the way we hoped it would.
Right. The other thing that's been happening is we're watching money flow, because what we have seen in terms of the meltdown recently, or the correction in the stock market, has impacted money flow over in the commodities and the ag sector, hasn't it?
Well, I think that's one of the things people haven't really given enough credence to, is a lot of the strength that came in the corn and soybeans there through the winter came because of inflation fears, with traders going in and funds going in and buying a basket of commodities, including the grains, as an inflation hedge. Okay, that's all fine and dandy when we thought we were going to have inflation, but now all of a sudden you're talking about recession. I mean, even this morning you saw the inflation numbers had dropped back a little bit. So all of a sudden that trade's getting unwound. And I think it's part of the reason corn went from funds long, 353,000 contracts to 200,000. Because the need for that inflation hedge has kind of disappeared on us here. So, yeah, I mean, that's all part of the money flow that you're talking about.
Yeah, absolutely. I'm glad you mentioned that CPI data out this morning as well. So the market almost felt a little bit as well like it was disappointed with the WASDE yesterday. We didn't see any adjustments on the domestic corn and soybean balance sheets, but when will USDA rectify the corn demand situation? Because we do know it's better than what's being printed, right?
Yeah, I don't know whether they're holding off to see if there's tariff impacts, or that might be part of what's going on. That probably isn't going to happen till May. I think there's adjustments coming in their estimate of the South American crop, but that doesn't generally get done till we're darn near done harvesting down there. So there's some adjustments to come from that too. So yeah, I don't know if that'll come in April or whether we're going to have to wait for May for some of that stuff to happen.
Yeah, so the next big news that the market's waiting for, one could be the April 2nd reciprocal tariffs, maybe the Canadian and Mexican tariffs going into place that were delayed. But the other big thing is this acreage number, right?
Yeah, there's no doubt that acreage shifting is really going to be interesting because that's all we've heard all winter long is how many guys are going to shift um, soybean acres to corn, and there's no doubt some of that'll happen, and it depends. Are you in an area that's good at growing soybeans and maybe not so good at second crop corn, so that limits you. If our price adjustments going to be made over the next month or two that take away from the attractiveness of that. So there's still some unknowns there, but I don't think there's any doubt there's going to be some shifting for sure.
For sure. And if the market prints some higher acreage, we've already seen the funds liquidating their long position in the corn. That could just pressure that even more, right?
Right. Yeah. Having said that, though, like I said, we've talked about it all winter long. So
True.
a big jump in corn acreage is not going to surprise anybody. We've also talked drought all winter long. So to some extent, that's been hashed over to some extent. So I guess we're going to have to see whether that actually happens. I always contend that it's a little tricky talking about moisture because it's not really the quantity of moisture we get; it's the distribution of that water through the summertime that's critical. And nobody's talking about tons of heat, and a lot of times that's a limiting factor on yield. So,
Right.
and in addition to that, the trades become convinced that we can grow corn on concrete. So, it's going to be hard to get the trade excited about rallying corn a lot because of weather and crop concerns, especially with a larger acreage.
Gotcha. So we're down this morning, as we mentioned, in the corn and soybeans. Is $10 going to hold on May beans, and where do we need to hold on corn here?
I think 990 is probably a better support point on the May soybeans.
Okay.
Corn, no, yeah, we're down. The 200-day moving average is down there at about 56 and a quarter on the May contract. So we're flirting with that. If you take that out, then we're going probably back into the 40s.
Meanwhile, we see the cattle market trying to rebound at least early here, and with the stabilization of the stock market, that seems to be helping the cause.
Yeah, the meat markets have probably tied themselves to the equity markets probably closer than anything else that we trade in the agricultural side. So, yeah, if you got some optimism about the markets and people's wealth, I guess tied to that, maybe that helps demand for beef. I don't know. It's the beef demand's been phenomenal as far as I'm concerned. No matter how high priced beef has gotten at the retail level. So and numbers are down. What are we down about 1% again on beef supplies? So that lack of expansion in the beef market is something that's going to haunt that market and support it. I guess maybe is a better word for quite some time here. I think.
Yeah, as well as the cash market strength. And I'm not sure if we're going to be higher again this week, but irregardless, you're at a big discount with these futures.
Yeah, we're at a substantial discount. I don't hear anybody saying that the cash market's going to soften this week. Like you said, it may not go up much, but I don't see it softening. And as long as that's the case, it's going to be hard for the futures market to fall apart. Having said that, I think a $2 to $4 rally in cattle, you need to at a minimum start buying some puts because things can change. Tariffs surprises can happen as we've learned here over the last month or two. So having a little protection probably isn't the worst thing you can do.
Absolutely. Okay, the hog market had a nice recovery off the lows, but yesterday it looked like we ran up into some chart resistance. Where does this market go now?
Well, that's going to be interesting because we had that sharp drop, and now we've had this nice little recovery rally that's roughly 50% of that break. So now
Right.
we have to sit here and say, okay, was that a 50% retracement, and then we resume that downtrend in hogs, or is this a setting up for a retest of the high? So we're sort of at that inflection point where we don't really know which direction hogs are going to go. As long as cattle stay well supported and the whole protein side of the market stays well supported, I would guess hog prices will too. And that spike down was maybe a bit of an overreaction that we had a couple weeks ago.
Yeah, but we have to keep these tariffs at bay here, especially to Mexico, or that thing could just fall or tip over, don't you think? Isn't that the
Right.
key here?
Yeah. That's another one of those markets where tariff policy is going to probably dictate which direction we go here.
Okay. Yeah, it has been super volatile for sure. All right. Thanks so much, Tom Fitzmyer with Summit Commodity Brokerage. That is Markets Now.